Hi, Biconomy friends. Last week was a big one for crypto, not because of price moves alone, but because of what happened behind the scenes. From crypto firms moving closer to becoming regulated US banks, to new custody guidance from the SEC, XRP expanding across major blockchains, and the Federal Reserve cutting rates, we saw clear signs that crypto is becoming deeply embedded into the global financial system. Before we dive into the headlines, let's take a quick look at the market. Bitcoin spent most of the week consolidating around $90,000 to $93,000 range, holding key support after recent volatility. Ethereum traded just below $3,000, still lagging Bitcoin, but showing signs of stabilization. Solana hovered near $135, cooling off after its strong Q4 run, while XRP held around $2.20, supported by growing institutional and ecosystem developments. Among newer layer 1s, SUI remained resilient around $1.90, and Stellar's XLM traded near 15 cents, continuing to benefit from its payments and cross-border narrative. Overall, price action this week was less about momentum and more about consolidation, as markets digest recent macro and regulatory shifts. Let's start with what might be the biggest headline of the week. 5 major crypto-native and crypto-adjacent firms, Ripple, Circle, Paxos, BitGo, and Fidelity Digital Assets, moved significantly closer to becoming regulated banks in the United States. The Office of the Comptroller of the Currency, OCC, formally greenlit their applications to operate as national trust or crypto banks. This is a major milestone. If finalized, these approvals would allow these firms to offer custody, settlement, and payment services directly within the U.S. banking system, under federal supervision. It's a strong signal that crypto firms are no longer being pushed to the fringes, but are instead being pulled into the regulated core of finance. Staying with regulation, the U.S. Securities and Exchange Commission also released new guidance on crypto custody. The SEC clarified expectations around how digital assets should be safeguarded, segregated, or reported, particularly for registered investment advisors and custodians. Investor.gov, the SEC's education arm, published a bulletin aimed at retail investors explaining the basics of crypto custody, including the differences between self-custody, exchange custody, and institutional custodians. Now back to markets, and to Ripple specifically. XRP had a big week, not just in price, but in ecosystem expansion. XRP was successfully deployed across multiple blockchains, including Ethereum and Solana, through new interoperability layers. This move broadens XRP reach beyond its native ledger and strengthens Ripple's vision of being a cross-chain liquidity and payments layer. On the cultural side of Bitcoin, there was a huge achievement. A statue of Satoshi Nakamoto was unveiled in the New York Stock Exchange, with the NYSE itself publicly acknowledging the moment. Whether you see it as symbolic or historic, it reflects how far Bitcoin has come, from an outsider experiment to something now recognized in the heart of global capital markets. Macro also played a big role this week. The Federal Reserve officially cut interest rates, though the guidance that followed was mixed. Chair Jerome Powell signaled openness to further easing if inflation continues to cool, but also stressed data dependency. Markets interpreted this as supportive but cautious, and crypto reacted accordingly with volatility but no panic. Meanwhile, outside the US, we saw another reminder of crypto's growing presence in traditional finance and culture. Tether, the issuer of USDT, made headlines with a bold 1.1 billion euros all-cash bid to acquire Juventus football club. While the offer was ultimately rejected, the attempt itself was telling. It shows how crypto-native companies are increasingly looking beyond finance, into global brands, sports, and cultural assets. And finally, one of the more understated but important indicators came from Brazil. Latin America's largest bank, Itaú, published a research note recommending that institutional portfolios consider allocating 1 to 3% to Bitcoin as a diversification strategy. Coming from a major Latin American financial institution, this reinforces the idea that institutional adoption isn't just a US or European story. It's global, and it's accelerating into 2026. In summary, last week we had crypto firms being approved as banks, regulators issuing clearer custody guidance, major protocols expanding cross-chain, central banks easing policy, and institutions openly recommending Bitcoin allocations. This doesn't mean volatility disappears, but it does mean the foundation of the market is getting stronger. Thank you for watching. Don't forget to like and subscribe. I'll see you next week.